Hello and welcome to an FX Times daily video recap. I'm CMS Forex market analyst Nick Nassad. Today is Tuesday, November 24th, 2009. We start today's recap with a look at a fundamental release from overnight in the Eurozone. We had Germany put out its IFO Business Climate Index for November, and the index rose to 93.9 from 91.9. The index measures firms in the industry and trade sectors, and it showed both current conditions and future expectations rising. Manufacturing, wholesaling, and retailing, also their business conditions improve, while construction fell further. Still, the overall message here is that the German economy continues on the road to recovery. Taking a look at the euro-dollar pair, we saw that the greenback rallied in overnight trading, testing the 1.49 area, which was about a 50% retracement of our move upward in this pair from the middle of Friday's trading to the high we saw yesterday. Now the euro managed to win back those losses, and for this session wound up slightly on top of where it started the day. The rally in the euro came despite US stocks sagging and commodities dipping lower. We did see the euro slide in the middle of New York trading, but it managed to even rally and get those gains back. In addition to some economic US data, which I'm going to get to next, we also had Fed meeting minutes where the Fed did comment on the dollar, and it noted that the dollar depreciation, if it were to intensify or to put significant upward pressure on inflation, the Fed would watch that closely. The FOMC said that the dollar's decline appeared to reflect the unwinding of safe haven demand. We saw that earlier this year as the financial crisis helped boost appeal of the greenback, especially U.S. Treasuries, and we saw the greenback strengthen. But now with the global recovery on track, higher yielders are gaining and the greenback is losing. Still, our euro-dollar pair remains within our now well-worn range between 1.48 and 1.50, and today we did not even test yesterday's high. Now we have pretty thin liquidity as the US Thanksgiving holiday approaches, and that can have one of two scenarios. The dollar is either at risk of a possibly sharp decline based on an exaggerated actions of relatively few market participants, or we can just have continued these ranges as we have a lull in trading. Weaker stocks and commodities helped the yen gain against the greenback, and we saw the pair fall below a level of support that we had most of last week and to start this week around the 88.60 level. So we broke below that in today's trading. That low brings us back to price action we haven't seen since October 8th, 9th. And if we zoom this pair out to a longer time frame, let's say 4 hour, we can see that our downtrend since November has continued, our rather longer downtrend that we saw throughout most of the summer. Then we had a counter rally in October, and now we're coming up against the support that we saw in the beginning of October around the 88 level. So we'll see if the greenback continues to be pressured against the yen in upcoming trading. Now let's turn to some US fundamentals. US stocks softened in the morning after we had US GDP data come out, and the economy was shown to have grown not as fast as originally estimated. The forecast for this preliminary release, which is the second release of third quarter GDP, was for 2.9% annualized growth rate, but the number came in at 2.8%. So that was lower than the 3.5% rate we saw in the advanced release. The reason for the decline was a smaller reading in the personal consumption index, which fell to 2.9 from the 3.4% that was originally reported. Two other factors that worked to lower growth was a wider trade deficit as an upward revision to imports offset an upward revision to exports, and we also saw lower non-residential business investment spending, which again was weaker than originally reported. So weaker growth numbers obviously work against risk appetite. In a bit of good news, we saw the Conference Board Consumer Confidence Index for November rise to 49.5 from an upwardly revised 48.7 in October. Though the present situation remains steady with last month, the expectations index did rise to 68.5. If we take a look at the graph to the right, we see that following a very sharp slide in confidence throughout '07 and '08 and the beginning of '09, we bottomed out, and after rising somewhat, the increase in confidence has leveled off around the 50 level. We can see lower confidence reflected in weaker retail sales, which here are shown in percent change on a year ago, and throughout most of '08 and '09 we've been rather sharply negative, though more recently we have seen this year-over-year figure move towards zero. A third release was the S&P Case-Shiller House Price Index. For the 20-city year-over-year change for September, we saw housing prices down 9.4%, which, though an improvement for the 11.3% decline in August, was a worse than expected reading. The 10-city index was down 8.4% on the year. In monthly terms, the 20-city index rose 0.3%, while the 10-city index rose 0.4%, which is the fifth straight month of monthly increases. So following a very sharp slide in housing prices, we have seen them bottom out as well, and we are moving back upward, though they still have a ways to go following their collapse in 2008 and 2009. Finally, we saw the Richmond Fed Manufacturing Index for November disappoint forecasts as it came in with a reading of 1 when forecasts had called for an increase to 10. So despite expanding for a seventh straight month, the activity here was virtually flat. Growth in shipments and new orders tapered off, while employment returned to negative territory after being positive for the last 2 months. Otherwise, the other sub-indexes were generally in line with a month ago. Now let's take a quick look at some other currency pairs. Here, the pound dollar, we see that the greenback strengthened overnight, but then the pound managed to rally and cut most of the greenback's gains. Our support adhered to this upward sloping trend line from the lows set on Friday and Monday, and we showed you this downward sloping resistance trend line in yesterday's video. So our trading was within our range seen in yesterday's trading, so we're sort of having this squeezing consolidation action in the middle of this week. The Aussie US dollar pair, one of our carry trade favorites, also saw the greenback gaining in today's trading following a sharp slide overnight, and then though the Aussie tried to counter rally, it did not manage to move above the 0.92 level, and though that's where we're going to end today's trading. Similar to the pound pair, we can draw an upward sloping trend line of support, and we'll see if this level acts as support later on in the week. So let's take a look at some of the fundamental releases that will be coming out in tomorrow's session. Tonight, we're going to get Japan posting its trade balance and measure of inflation, its corporate service price index, while Australia will post its quarterly construction work done figures. Overnight, Germany posts a measure of consumer confidence, while the UK will post its revised third quarter GDP figures along with the index of services. The US docket will be pretty busy as we have holidays coming up on Thursday. So the US will post its weekly jobless claims on Wednesday instead of Thursday. We're also going to get durable goods orders data. We're going to get data on personal income and spending, measure of inflation that the Fed watches very closely, the core PCE price index. We're going to get the final version of UMich consumer sentiment for November, as well as new home sales. So that's going to be a lot of data for the markets to digest, and we'll see how it goes. And that concludes today's daily video recap. For more analysis, including daily technical analysis videos, please visit our site fxtimes.com. That's it for me. Thank you for watching, and happy trading.